Tesla is valued about 8 times more than Ford and General Motors, even though it makes far fewer cars than the two. But according to the expert, if Tesla is valued as traditional automakers, rather than a tech company, the stock price could still fall more than 60%. Is Tesla an automobile company, or a technology company? The idea that Tesla is a technology company gained credibility in 2013, when its stock price shot up by a whopping 382.5% within a single year. There are several points of similarity between Tesla and the tech sector. Tesla's valuation in the markets has increased despite its history of reporting losses, similar to other big tech companies. Even the company's financial ratios are similar to those from the tech sector. For example, Tesla has a high negative PE ratio, reflecting investors' faith in its future earnings, despite its current losses. However, Tesla's product reflects its roots in the capital-intensive automobile industry. In that respect, the company is unlike technology companies, which have high margins and low scaling costs. Tesla requires massive capital infusions to finance its production costs, and will need to invest significant amounts to scale its operations. This question has been at the center of a years-long debate between investors and skeptics of the electric vehicle maker. Bullish investors focus on its EV innovation, self-driving tech, and forays into solar and energy storage as reasons why Tesla deserves a premium valuation to traditional automakers. Even after falling more than 60% in 2022, Tesla is still valued at about 8 times more than Ford and General Motors. Both Ford and General Motors have a market cap of about $45 billion, compared to Tesla's valuation of just over $380 billion. In fact, even after Tesla raised more than $700 billion in market value this year, it's still worth more than the 4 biggest auto companies combined. Tesla currently trades at a forward PE ratio of 21x, compared to 6x and 5x at Ford and General Motors respectively. The only major auto company that has a higher valuation multiple than Tesla is Ferrari, which has a gross profit margin that's about double Tesla's, due to its focus on selling high-priced luxury vehicles. Tesla sells about 1 million vehicles per year, where Ford sells approximately 5 to 6 million vehicles. So under the argument, it should be worth at least as much as Ford, or maybe 2 times, or 3 times of Ford. But 8 times? That's too high, according to Greenwich Capital Chief Investment Officer Varun. If Tesla fell to a valuation that was 3 times as much as Ford, it would be worth $135 billion. That would represent a 65% decline from current levels. Varun said, the only way Tesla could be worth the valuation is if they are going to put all other automakers out of business. But both Ford and GM are making EVs, along with every other car manufacturer. Although they started later, eventually they will catch up to Tesla. So, if Tesla were valued by investors more like its automaker peers, while maintaining a sizable premium due to its fast growth rate and technological innovations, the company could see its value plunge even further.